everyone. Thanks for being with us on this Tuesday afternoon, the 28th of September. My name is Ashley Jones. I'm the Managing Director of Community Programs. And like I said, we appreciate you being with us for today's workshop that's hosted by Frost Accounting Firm. This is all about how to save your small business big money. So they're going to walk through tips and tricks and tools that you can use to do just that. Before we dive into that, I do want to give a big thank you to our sponsors. Of course, Frost PLLC, the Little Rock Regional Chamber, Simmons Bank, and Wright Lindsay Jennings for supporting our community programs and efforts in that regard. And as far as those programs, if you haven't signed up for the Venture Center newsletter, we encourage you to do so. You can sign up through our website and or social media, but we have some programs coming up that we want to bring everybody's attention to. This Friday, we've got a woman-run panel discussion with Wright Lindsay Jennings. They're going to discuss this VC Woman Achieve, this new mentorship program we're rolling out with several of our sponsors. If you're interested in that, feel free to attend and register for that one on October 1st. October 6th, we have a workshop with Yarn. She's going to be giving telling and how to tell a story about your business, which is really important if you're pitching or communicating that to anyone. It's really important to know how to tell the story of your business. So that is October 6th. You can tune into that one. Also, October 8th, we have a cybersecurity for small businesses workshop hosted by Mainstream. Again, we've mentioned this in the last session. Cybersecurity isn't really something you think about until after the bad thing has happened to you. So we want to provide tips and share some insight on how to strategize and think through that before bad things happen. With that, I want to turn it over to Jason and TJ. Again, they're both with Frost PLLC, and they're going to host today's workshop. We'll save room at the end for questions as well. So TJ, Jason, take it away.
Thanks, Ashley. Appreciate it. My name's TJ Boyle. I'm an audit and accounting partner at Frost. I've been with the firm for about 21 years now. Work particularly with for-profit businesses, anywhere from small to startups to billion-dollar companies. So we run the gamut. Jason, let you give a little insight on yourself as well.
Yeah, much like TJ said, I'm a partner here at Frost. I'm a tax partner, service many of the same companies and types of companies and industries that TJ services. We're excited to be a part of the presentation today, and I hope to add some value.
Well, guys, like Ashley did say, there should be places to ask questions. One thing we always we like to say whenever we're presenting is, it's not designed for us to feel good about presenting, but it's designed to be an education to the listeners and the viewers. So if you do have questions as we're going through, please don't hesitate to answer. It's going to be a lot of discussion, not a lot of slides and charts that are going to have you looking all over looking at a lot of small things. Want to cover some big topics. We're going to start. I'm going to start with a few topics that are more general business related, things we've seen in the past that really end up a little bit like Ashley was talking about on the cybersecurity event next week or the week after. Things that you think about afterwards that become issues and then you deal with. And then Jason's going to get into more details regarding particularly tax and some compliance areas where he's also seen a lot of people have opportunities, but also have struggles. And we want to help you guys avoid that on the front end. So first thing, tip one, get an advisor team. Sounds probably self-serving given that I'm an advisor, but we've seen that on the back end where people come in with problems and they say, what have I done? And I try to do this myself. When you've got your business going and it's very easy to say, well, that's an out-of-pocket cost. A good advisor team will pay for itself on the front end, whether it's structure of business, both from an accounting, thinking about that from a system to support your business. If you're a restaurant, you want a different type of accounting system than if you're a general manufacturer. And you want to think through those processes, what's going to be the proper thing that works for you. So get the right advisor there. Legally, Jason will talk on some of the business structures that you may want to consider. I'd also say, like any business, have a good banking relationship. It's very easy It's much easier to work through that process of lending if you've got some good relationships already built up when you're looking at either expansion or maybe you're looking at feasibility of does your business work. And I'd also say, as Ashley mentioned, in today's world, understanding people that help you with risk. So insurance, and from a cybersecurity standpoint, do you have a team that's helping make sure that you're protected? I say that as a group that's watched a lot of companies, whether large or small, have shutdowns due to ransomware and other things that they could have prevented. And so knowing that, just all those things, think about that on the front end. You know, you build your team out and it pays off on the back end. And the other thing is that if you have to pay on the back end, it will cost you more. I can promise you that. So next thing, business plan and budget. These need to be lined out really in detail. So that's where one of the things you can have is definitely have your advisor team help you through that process. So whether it's the bankers helping you understand the debt and when you need it, but also having the feasibility of, does it even make sense for your business? So for instance, I was assisting somebody and we were looking through their business plan, and their consideration was spending between $250,000 to $1 million building out a building. Said, yeah, we should do this. Well, we looked at what their business was, which was much more of a consulting and teaching program. They could rent that space for less than really the overall cost of what they were going to have to buy. And they didn't have to worry about the maintenance, and they didn't have to worry about the downtime. And when they ran those numbers, they really realized this was a much more effective plan. Secondarily, when you're building out your business plan, think about all the costs involved. You know, have you really gone through and given an honest assessment of what's your total cost? And the reason why you need to know that is, again, back to your team, is you may need finance, and don't give the your bankers, your lenders a shock. You know, most times when we see general startup businesses, we see them with we don't see them hit their targets because most people have a little too rosy picture. But that also, when you don't hit those targets, all of a sudden your lender and your investors have concerns about the accuracy of your information going forward. So definitely have that thoroughly vetted between your team. And then you need to get in that process of consistently looking at it, because this is also a plan of, let's say you want to expand. I've actually got a meeting later today with somebody who's looking at an expansion. How does their business model work and pay off the expansion? How does it pay off that? What's the rate of return? And making sure that, is it a right business decision? Sometimes you come back and the right business decision is not to do it because the numbers don't work as much as you want to, as much as it may seem like the right thing. Sometimes you got to be honest about your plan. Review and ask questions. Review your numbers. We've worked with a number of small businesses and businesses even that have come through the Venture Center in some way, shape, or form. And people seem to have problems sometimes, and they almost seem afraid to ask the questions, what's going on? That's where get with your advisors, if it's internal, never be afraid to ask a question about what's going on in your business. For instance, we had somebody recently, I was talking to, and they had small business, and we weren't working with them yet. And they said, well, I don't understand why I'm paying taxes because I haven't pulled any money out. And this is the first time we've seen them. And we go through their tax returns, and we go through a number of things. And then it was relatively a simple thing that, well, they hadn't pulled money out of the business. That was true. But they did have, they had been making money inside the business. They were a pass-through entity. That was the reason. But they hadn't had anybody to bounce that off of. Once we got them to make sense, they understood that, okay, we've got to set aside this money. This has to go out. This isn't going to be a shock anymore. So constantly review those numbers, ask those questions. There's nothing really wrong about that. And also make sure you ask questions of your advisors. You know, Jason and I both both are used to that as a part of our job, and should be anybody you use, is it's education. It's not just here's your numbers, go on, trust us. If you don't understand it, continue to ask. If you don't understand an insurance policy, keep asking those questions until you do, because your advisor should be able to let you do that. And what you'll find out is a lot of times there's opportunities there to save you money. Internal controls. That's one thing, just so you guys understand what's an internal control. So it's something that's meant to prevent or detect errors and fraud. So preventing and detecting errors and fraud. I bring that up because in small businesses, according to the Association of Fraud Examiners, and this is a pretty constant number that they run, and they run it about every 2 years. They do a full study, and it's about 5% of all revenue is lost in some way, shape, or form in fraud. Now, that's an average across the board. But where all do these things happen? Well, you get somebody that works for you, and you get very trusting that you can have money go out the door that way. You can also have money between new vendor setups. And are you looking at the checks going out the door? You'll see on average, actually, the normal fraud that goes out is over $100,000. And these aren't just to small businesses when I say that, or just to large businesses, excuse me. These are across the board. These are businesses, when you're talking about over time, this might be $1 million business that's given up that much money. So these things turn into real forms of money, real forms of business, and it can happen in a number of different ways. Fraud isn't just somebody stole my money. It can be collusion. Are you tracking who your customers are? Are you tracking who your actual new vendors are and any contracts with those people? If you're not, and you're not fully understanding it, you always should be feeling free to call up the vendor, call up somebody else to make sure there's nothing additional going on there. Another thing we found, and Jason will talk, I think, a little more on the tax and making tax payments, is make sure your people that are working for you, if you own the business and you expect them to be making these payments, really are. You get behind on these things, and all of a sudden you've been spending cash you really shouldn't have had. You'll see that in a number of different ways, but a lot of times that turns into somebody covering themselves up. So make sure you understand what's going on in all of those situations. Next up, and maybe one thing is always being able to ask questions. Kind of talked about that, but in particular, it's a matter of, on this, is asking about costs. So when we talk about understanding what your actual costs of your business are, I'll give you a good example is a manufacturer we had, and they would manufacture a product and they kept it in storage. And they always told us, we need to keep 6 months on hand, 6 months on hand. And we would walk through the numbers with them and told them, well, you're paying between paying storage fees and using your line of credit to finance it, it's costing you about $100,000. Well, sometimes good things come out of bad situations, and the pandemic hit. Supply chains became disrupted. They had to reduce their inventory in storage. They've come back since and realized, we didn't need that much inventory on hand. So now all of a sudden they're going to have 6 figures worth of free cash flow additional to their bottom line. And that's every year. Other places where we've seen people, when they're digging into their numbers and asking questions of their vendors, internet charge. Now that sounds very simple, but the larger you get, the more complicated your structure gets. There are constantly ways that technology is changing, and that should be on your list of things to ask and go through. There are different ways that people can structure and actually get, they may talk about it next week, but even in the way your internet providers provide you your service and have between backups and also being able to have switchovers and the change of technology, there's tens of thousands of dollars that may be able to be changed, especially if you have multi-locations. Phone service, again, look at what you actually use, what you need. You may not need the same things you've always used. Online voice over IP, online phones now are saving people, again, tens of thousands of dollars, depending on the size, but at least thousands of dollars. And also work with your vendors and customers. You know, there's always a chance that either you can get paid quicker, maybe it's with a discount, or you can pay quicker with a discount, or maybe you can get you could get a discount from your customer, depending on if you're willing to be maybe a little more flexible. Maybe you don't need things delivered quite as quickly. Maybe you have time frames, especially when you're dealing with your service providers. So I would say all those things are they're general business questions, but they're the types of things that we've seen turn into real money because people a lot of times either one, afraid of, they don't want to look like they don't know the answer, or two, they don't know what to ask for. So definitely don't be afraid if you don't know something, or something just doesn't look right. Look until you get the answer you want. So with that, I'm going to switch over to Jason Thomas, who's going to go into a little more detail on certain selections of entity and details from that side. So Jason.
Yeah, thanks, TJ. Just a couple of comments based on what TJ said. You know, when you are starting out, obviously, you're very cost conscious. The advisor side is going to change. And one of the mistakes I see a lot of people make is choosing advisors that are maybe too sophisticated and too costly for them at this point in time. Maybe they want a certain name or a certain firm, and that obviously will cost you. And it's a matter of, as TJ said, continuously evaluating who are you working with and what value are they bringing you, and when do you outgrow that advisor. And then the second thing, you know, TJ giving the example of the warehouse and the lease, and I'm sure that his client was taking into account the tax impact, but a lot of times when people are evaluating things on a purely dollar for dollar basis, maybe sometimes they overlook or don't understand some of the tax side of things that can actually essentially help finance a transaction like TJ was talking about. Talked to a client just this morning and his CFO about exact same issues. And while the loan and everything was great, really would pay off, you know, where are we going to really save on our taxes? So always be asking that same question. And I know I'm biased in that respect, but I think that really adds to the bottom line. Jumping over into my side of the presentation, you know, generally when people start out as a startup and in a new business, they form an LLC. It may be themselves single member LLC. They may have multiple partners that are with them. And as you continue to grow, and as maybe you're starting off and you're generating losses, and that is fine through an LLC. But as you start to make money and start to pay taxes, there are some tax impacts associated with an LLC, such as self-employment income that gets taxed a little differently than the other incomes, an additional tax. That where it makes sense to start to look at, you know, what other entities are out there that I can change into or evolve to that may be better for me from a tax standpoint and a legal liability standpoint. You know, should I convert to an S corp and avoid self-employment tax, or should I even consider converting to a C? You know, with rates as low as they've been, when they dropped the C rate down to about 21% Fed, you had a lot of people ask that question. And both of those types of entities are easily converted to from an LLC. And, you know, you have to understand the ins and the outs and when I can and can't do it. But asking those questions of your advisors and understanding that as your business changes, as you continue to, you may grow into multiple, doing business across several states, there are going to be answers out there that you need to take into consideration that ultimately drops to your bottom line. Yeah, is everybody concerned about costs? Absolutely. What is the one cost that you hear more often than not? Is the number one thing people are concerned about? Taxes. I just got off a 2-hour call with some shareholders, and what did we spend an hour of it talking about? Taxes. So that's where the bottom line really hits and where people want to understand where to go. Next slide, please. Back to taxes, avoid hidden taxes. So what am I talking about? Obviously, everybody focuses in on income taxes and what is the impact there. But what are my franchise taxes? What are my sales taxes? What are my property taxes? Where's my exposure? Most people understand what those are and what their exposure is in their home state. You know, if you start out small and you're only operating out of Arkansas, for instance, then we generally know what we need to do and what are our obligations. But when you start to sell into other states, when you start to have perhaps salespersons or other employees in other states, am I holding inventory elsewhere or equipment? You know, what is my tax exposure, and am I paying the taxes, and when are my limits, and when do I have to? You know, and where this comes full circle for you is if at some point your goal is a liquidity event. I'm building this business. My goal is to sell it at some point and take that cash and walk away and do whatever I want to do. The low-hanging fruit for a buyer of a business is always the state and local taxes outside of your home state. And when I say that, what is the impact on that liquidity event is this. If say I'm operating in 10 states and I'm only paying sales or property taxes in 2. Well, those 8 states that you've been operating in for the past decade, a buyer of your business may come in and require you to set aside a certain amount of your purchase price into an escrow and hold that back so they can pay penalties and interest and taxes on taxes that you should have been paying. So keep abreast of that issue. Ask your advisors again. Had a client who relocated here to Arkansas from California. Small business, was the state gave him certain reasons to come from a tax and other economic development standpoint, but he didn't understand what his personal property tax obligations were once he moved here. They were different than California, and he got hit with a big tax bill, had no idea it was coming. So keep all that in mind. It all adds up. We all want to focus on the big ticket items and what, how does that impact us from a tax perspective and savings. But really every expense does add up, and keeping track of that can sometimes be, lack of a better word, a nuisance. But if you have what I see more often than not with a lot of startups and in small businesses, sometimes they don't have a dedicated bank account, or in particular dedicated credit cards. Sometimes they're still using a personal credit card for both personal and business. You lose track of what is business, what is personal, and when it comes time to account for what did you do through the year, you've lost some expenses and you're paying more in taxes. And so the advice we always give obviously is have a separate business card and be disciplined. Sometimes it's easy to say, well, I want to use this business credit card for anything and everything, or I don't want to put this in my personal card for whatever reason, but let me let the business pay for it. Be disciplined. If you have multiple businesses, have multiple credit cards, have multiple bank accounts. It may seem like an administrative burden, but it really does help your bottom line long term. Back to something, TJ obviously started off the presentation talking about advisors. Advisors are expensive. I don't care who you're using. It does add up quickly. And something that I know some of my better small business and startup clients do is they insist on a written fee agreement and ask for fee quotes. Now, sometimes there are reasons why the fee quotes don't work, but I worked with a startup last year, December of last year. They asked to prepay all of 21's fees, and we came up with an estimate, came up with an agreement. We've had to stick to it. So do that as part of that budgeting process. What can I spend? Where do I think the value is going to come in, and how do I handle all of that? So work with your advisors. They'll do this, but it'll pay off in the long run. This kind of ties back into the hidden taxes. Take a stand on your local taxes. Don't always just accept what's given to you as right. People do make mistakes on the local level and the federal level, for that matter. But the local level are again these hidden taxes. You get a bill for your personal property taxes or your real estate or whatever. Question it, push it. And within reason, obviously, but understand the rationale for, hey, if my bill's gone up, why is it this way? And a lot of times they will work with you, but being proactive in this fashion, again, will just only drop more dollars to your bottom line. Finally, something we've been told to do since we were kids, share with our friends. Sometimes we don't like to do that, but when you're a small business, spreading costs out with other similarly situated businesses can really pay off. I have a lot of small business clients who understand, if I buy in bulk and then we break this up, we're all going to save money. So find those businesses within your networking groups or people you may do business with, and where is there a place where we can go in and buy the goods and services that will service all of us, and how can we get a discount that ultimately saves us money, not only now but long term.
Jason, I was going to ask you a couple questions, kind of following up on your last two slides, but you talked about the sharing with your friends. And I know we've got a number of clients that have actually gone into arrangements where, yeah, they do buy in bulk because they're in similar industry. Do you see that as a way that should be done in a legal structure with those teams, or do you see other ways that maybe make it less cumbersome from a legal standpoint, or how do you see as the best way for companies to do that?
I guess here, TJ, it's a great question. Probably depends on the scale and how much are we talking about. Most times it's an informal arrangement between parties that will go out and agree that we're going to buy this and we're going to share that cost. But it could get to a larger scale event where you do need to maybe create a new operating entity or joint venture entity where you are buying in those goods and sharing those costs across your businesses. That's a good question.
And then on the previous page, you had mentioned taking a stand on local tax. And I know I've dealt with this on property taxes in particular. What do you normally see as the best, especially, we all know that local governments, state governments they're in need of money. I mean, every governmental agency is. So sometimes you will see some numbers that don't quite seem right. How do you see as the best way? Is it to come with what you think is the number, or to question from the beginning? What's the best way that maybe they should start out with?
I think to start, it is coming in with maybe a little research and background with your own number, providing them with the rationale for where you stand. But if you're depending on their reaction and where it goes, I had a client last year dealing with this same issue and brought in their legal counsel on it. And bringing in legal counsel made a big difference, and we were able to get some adjustments and changes. So I think that progression through those steps is the way to approach it.
Okay. Well, with that, Jason, do we want to open it up if there's any questions from people online, or Ashley?
Yeah, so we will open it up. I've just put a message in the chat. If you do have a question, use the chat feature, the Q&A feature, or raise your hand and we can call on you and unmute you. We do have a question that has come through. Could you describe some legal compensation structures for owners that avoid standard FICA taxes? Obviously, the goal is to minimize taxes.
Yeah, again, I think that my initial slide on entity selection, the easiest way to avoid them is to remain an LLC or a partnership. You can, or I guess this says I'm a C Corp, or maybe that's what Walter's saying. Not paying wages obviously is the easiest way, and in the LLC realm you can avoid that now. Given, as I said, they do you do pay self-employment tax on those taxes ultimately. So if you're not completely avoiding, when you're talking about if you're a C Corp, the issue that generally the IRS looks at when you're a C Corp is, are you paying yourself too much wages as opposed to too little? Because people are trying to avoid the double taxation of dividends. You pay tax once inside the entity, and then you pay again once you receive the dividend out. C Corp, the question generally is, am I paying myself too much because I'm just trying to pay one level of taxes? So on a C Corp, in terms of, there's no way to, I would say, avoid FICA. Can you pay probably a lower salary in a C Corp than you could in an S Corp? Yeah, I'm thinking in general that would be the answer, but I don't think there's truly, in terms of there are many ways to discuss compensation, but if we're talking purely about salaries and or just letting income flow through from an LLC, you're going to generally get caught with some of these taxes.
Any other questions from the audience? Like I said, feel free to raise your hand if it's easier to ask your question aloud.
Well, I would follow up with Jason on that. That is a good place where actually it's good to put some paper to pen or pen to paper, I guess, and actually look at how these numbers play out. Is it the right structure? We've actually, as certain tax laws are being discussed, we have people that Jason talked about the structure, and we may run some different numbers on should they change from being an LLC to a C Corp based on how much money they are taking out of the business. And so does it make more money? And these are things to continually look at. You can't just, especially in the way everything evolves pretty quickly now, you can't just necessarily be the same thing you've always been and just assume it can stay that way. So.
Guys, it appears we have a very quiet bunch today. No questions. You've answered all the questions.
Well, and also I'd say, is there anything else that you just want to ask that doesn't have to necessarily be perfectly on this topic? We're here, and we'd answer anything else we can.
Absolutely. Any comments? I'd like to know if anyone in the audience has done all of these things. Is there one that maybe took you by surprise, or one that you haven't considered? One of the tips, if anybody wants to share that information.
Somebody's doing 7 of 8. That's pretty darn good. Oh, if somebody's doing 7 of 8, that is pretty good, because I have people that are good companies, get an advisor team, have that business plan and budget, constantly review the actual numbers, having good internal controls, a series of following up, evaluate your entity selection, avoiding the hidden taxes, which, Jason, I think that's one of those that seems to catch a lot of small businesses off guard, especially it seems like maybe restaurants and others that we've seen in the past, whether it's remitting sales tax and employee taxes. And
Right. Now I have a very, what I would consider sophisticated client on the western side of the state who just happened to decide he wanted to open up a liquor store, and completely dropped the ball on almost everything he had to do to get it on the tax side to get it going. So we got him caught back up, but yeah, that's been an issue. I do think, TJ, the one thing you did mention, and I think it's hard for a lot of small businesses, is the internal control. Either due to a lack of personnel and people having to wear multiple hats and take on multiple duties, and that's generally where that internal controls and the fraud really does arise, is having, only having so many people that can do things, and those people are wearing so many hats. It's hard to keep a control on, every dime and expense.
Well, and I'll tell you, it happens in a lot of different places. So we had a recent situation. Me and my wife were on vacation and we went to a park, and we're both CPAs, so we were both from that mindset. We go in and somebody says, "Oh, the register's broken for credit cards." I said, "Oh, okay. Well, fortunately, we got a little cash." Something didn't quite feel right when they said that, but they said, "Well, just hand them this sheet, this entry whenever you get to the entry, because there should have been another fee, and they'll be good." So, okay. We're like, okay, you've got collusion between the two people, because there should have been two fees to have been paid. They took the cash. I'm sure that is going to be trashed, the entry that we had, the ticket. We did actually call up the Parks Department. It wasn't here in Arkansas, so you guys can be thankful it's not our group. But yeah, so they're actually looking into it, because we told them, we said, "Hey, we're just two accountants, but we're pretty certain this is collusion between the two to skim money." And so it happens very easily. If you deal with it, everybody should be aware and be looking at it. I do have a question from Becky Pittman regarding, will these tips be somewhere that they can review them? Helpful to see where we're standing, and then maybe come back for further advice. Yeah, we'll I think the Venture Center will have access, and we can also put this out on our site. Maybe expand on it, and I believe it should have, well, Mimi, are you able to put out our emails into the chat box, and we can do that. And then if you want to reach out to anybody, we can, either Jason or myself, we're happy to talk about that.
Mm-hmm. And we've had a few more questions come in.
Oh, okay.
Mickey asks, how do you account for import duties? Are they taxes or cost of goods sold?
If you're talking about from a general accounting, I think of them as a cost of goods, really. I don't think of them as a tax. I mean, they're a cost of getting your goods here to where you can sell them. So yeah, roll them up in there.
And then another question about small business and engaging with an advisor. How do you go about engaging with an advisor? How often do you meet? And they're afraid that hiring an advisor is outside of their budget and just looking for general advice.
Well, generally people are, the first step a lot of people do is ask, who do you work with? Obviously Google searches is another common thing, but how do you engage them? I think how do you engage them is to reach out, find as many options as you can within a limited number, 3 to 5. And it's about having interviews and finding the right fit, not only from a sophistication, but a personality standpoint. It's a significant issue. In terms of how often do you meet? Again, I think that dovetails into the second question of budget. As I gave the answer, or I gave the example earlier, I was working with a startup last year who said, this is what we can budget, or we want to budget for the next year. What is this going to buy me? And prepaid fees up front. And it's worked out. But a lot of small businesses do want that set monthly fee, whether that's for bookkeeping, tax, or other advice that they can get to. And then finally, if it is, you think it's a project or questions that are going to significantly ask or add a lot of expense, ask that advisor if we can limit this to 5 hours, which whatever that is, per hour cost is whatever that becomes. Can we limit it to 5 hours, see where we get, and see what I think after that, and then you can decide how much value am I adding, and do I want to proceed on with this? I think it's all about cost control at that point in time, and understanding the value that it's bringing to the bottom line. What is the opportunity cost for not moving forward versus the cash out the door?
That's right. I mean, I think like Jason said, try to ask around when you're talking at the very beginning, and it may be anywhere from talking with people, if you're through the venture center, talk with people at the venture center. You know, and there's some places to get some. I think a small business ASBTC is a small business resource, but when you're moving beyond that and actually needing probably, I'd say more like a steady regular advisor, that Jason's right about if you've got a budget that as much as you can put into it, you know, you've lined out where you can go. But also a lot of times those relationships grow and you realize, you know, this person has helped me through it. They know my business. It's worth more time. And maybe we can work out some other arrangement or however, or maybe I can provide you more information. I can get more regular meetings to look over my information and help me out without necessarily it taking any more time. You know, sometimes work through it with your advisor and say, well, how could I use that same amount of time? Could I provide you information in a more streamlined manner? How would you like to see it? Because at the end of the day, I mean, a lot of times it is just a time situation. You know, we're always happy to help make that adjustment because we want to work with people. We want to see them succeed, and that's the enjoyment. So.
And we've put both Jason and TJ's contact information, emails in the chat box if you'd like to reach out to them and ask any additional questions or seek, maybe you want them to be your advisor. Feel free to use those emails and the phone number to reach them. If there are no other questions, we'll go ahead and wrap up. Again, their contact information is there, and you can always reach out to the Venture Center as well. Big thank you to Jason and TJ today for going through these tips. I know there's several small businesses here that may not have thought through all of these tips and things to consider as you're starting your business or growing your business. So thank you again to Jason and TJ for going through these tips. We've got a host of other programs coming up. We hope you'll register for our newsletter and sign up for all those events. Again, thank you to Frost PLLC, the Little Rock Regional Chamber, Simmons Bank, and Wright Lindsay Jennings for supporting our programs and sponsoring these. Thank you so much. And without further ado, we'll go ahead and wrap up. Everybody have a fantastic Tuesday, and we'll see you again soon.
Thank you.
Thank you.